All right. Well, I also have something to note on the cues. I actually posted this for newsletter subscribers as well. And if you didn't catch it, I just thought I'd put it here on the live stream, you guys. This is the 5-day moving average against the cues, and the arrows are highlighting where we've got three candles either moving above the 5-day moving average when it's moving higher or dropping below on the way down. And I've been noticing, and honestly, shout out to Brian Shannon. He talks about the 5-day moving average all the time. So credit to him for tuning my attention to it. And he might trade it a little differently, but basically the way, I mean, he trades it, kind of similarly. But the way I'm looking at it is, what I notice is, if you are looking for three candles, right, earlier on this chart, you can see last summer when we had the downturn, as soon as you had three candles underneath the 5-day moving average as it turned down, you could take a short trade and ride that until it broke back above that 5-day moving average. And you could repeat that process pretty cleanly, as well as to the upside. And you can wait until you see three candles doing the opposite, right? So on the upside here, you had the three candle entry at the bottom. And I'll go ahead and highlight that here. I forgot about my laser. I'm getting excited about this, Shaun. So we got the entry right here, right, on the first initial upside. And then, there's no real reason to exit the trade. You can just stay in the trade as long as we're above this 5-day moving average. And then here we did get a break below. And there was, you could call it three candles below, obviously, right? These three right here. So this might have got you out of the trade. Still a really nice gain here that you would have had. And then quickly the candles recovery of three candles above the 5-day again. And you could enter and ride this all the way up until, of course, this break here. It's going to give back some of your trades. But again, another positive trade. You get out, you wait for the candles to get three above again. And then we've been riding ever since with no three candles breaking below consecutively, right? Continued upside. So when we're in markets that have been just running, I do look for, in either direction, by the way, I do try to look for things like this to help me stay in a trade, because, I mean, just face it, once we've been this extended, it is harder to, stay in and not just take your profits, right? Completely off the table. So what are your thoughts on this? Does this resonate with you, Shaun?
I've not seen this one before, and I'm really glad you put it on this live stream. Really appreciate it. But I do have a little quick question, which other people might actually be looking at as well. So
Yeah.
the candle we created on Friday, obviously, it's kind of halfway down the line. Would that be one candle, or this next three would be the next three below it? That makes sense. So three clean candles, basically, is what I'm asking.
I look at the close. So yeah, three closes below or above. So that's the
Okay.
first close I would call below. Yeah. So we need two more candles for me to, go ahead and cut and start looking for downside and see what happens.
So that's 1 out of 3. Nice.
Okay,
Yeah.
so point for me, and I asked this before, and I think we are following the trading stop loss here to make sure that as it goes up, we our stop losses are getting updated automatically rather than having a specific stop loss, considering it's a daily candle.
Yeah, like I move my stops up below this, like to maybe the prior highs. So for example, if we entered here and we're riding this trade up, I would move my stop up to, align with this prior resistance point. And but then I would also just kind of be watching. And if this break here had gotten the third candle lower, I wouldn't have waited for that stop to trigger. I just would have got out here.
Okay.
But to your point, we might just get one knifing candle, right? So it's good to have that trailing stop and not just sit here and wait for three candles. I'm not waiting for three candles to knife, 20% down and then say, oh yeah, maybe I should get out. Like, put your stops in for sure. And then also notice, look at this run, right? Huge move up before a little bit of a turn. Then about 2/3 of that, and we pull back. And then, kind of the same. But then this most recent one is about half that, right? So it gets tighter the further you get extended. And this is where you start looking for maybe some periods of consolidation. So,
So what? One more question from
yeah.
an options trade standpoint. Would you think this is a put credit spread or call credit spread? Which side would you want to trade? I'm thinking of put side, right?
Yeah, I think I would agree. Why are you leaning towards the put side? It,
Because
it,
we can put our so this resistance at the I don't have it here, but you can see
sure.
the yeah exactly that way. So that could be a level, right, with some volume shelf. So that
Yeah,
would
right
be
around 410.
yeah okay, all
Yeah.
right.
So, that's a good question, and I haven't thought about it long enough to give you a clean answer here, but I think I would lean towards the put spread there, put credit spread, and collect some cash and expect higher highs because you're following the trend here. And I think that's the route I would go.